The US federal government is set to shut down on Tuesday if Congress can't come up with a compromise plan to fund it, which looks unlikely since they haven't managed to negotiate a bipartisan spending bill since early 2024. Republicans are offering a temporary funding bill that would keep spending flat, but Democrats say they won't vote for it unless it reverses cuts to healthcare. Well, Vicky Pryce is Chief Economic Advisor at the CEBR. Vicky, bond markets don't seem too alarmed by this yet, but would they be?
I think there would be if we're getting close to a shutdown actually likely to happen, and when it does happen. I mean, the question really is, if it does happen, how long does it last, and what the impact on the US economy will be? I mean, we had mixed results coming out of the various indicators in the last few days. We had some good new home sales happening in the US. We got some data on that yesterday. We're going to get some initial job claims happening today, so we'll see what actually they say. But overall, the economy seems to be slowing down, and loads of people have lost their jobs, of course, in federal areas where there's been a real crackdown in terms of efficiency by President Trump and his administration. So there could indeed be a fallout because quite a lot of federal workers are not going to get paid. Real issues about those who receive retirement payments and loads of other services that are being given to people in various areas, including those who need particular extra help with survival, if you like, and food and so on. So it is going to be an issue for growth, which has already been revised downwards by the OECD, as we saw earlier this week.
As you said, Vicky, we've already seen widespread federal layoffs in the US. A shutdown could lead to more, and US unemployment is already on the rise. How concerned do you think we should be about the US labour market?
I think we should be. There is an interesting aspect of this, which is that quite a lot of young people don't seem to be able to find jobs. But of course, what we've seen now is, quite a lot of reasonably well-educated and skilled people losing their jobs as well, sort of coming into the market. And the question is, will they find jobs easily? And of course, what the government is trying to do in the US is also attract a lot of investment coming in from elsewhere and more homegrown industry, if you like, to take over from imports with all the tariffs that are out there. Now prohibiting quite a lot of companies elsewhere selling to the US because, of course, it leads to them being competitively disadvantaged as a result. Prices are going up as well. So there is an issue for the average worker in terms of being able to cover what they need as well, in terms of being able to do the weekly shopping, if you like. So there are issues there that are affecting the US economy anyway. And I mean, what will the bond markets do in the future if they think that any efforts to perhaps contain some of that increasing debt, which they're all forecasting, are perhaps going to be more difficult to engineer? So that's going to be an issue.
Fed officials, including Chair Powell, sounded quite hesitant about committing to further rate cuts this week. Do you think, though, that they might be caught out and be forced to move faster?
They might. I mean, if this shutdown actually means that the economy slows down, the percentages that are calculated in terms of what it means for every week of a shutdown, in terms of bringing, GDP, lower than it would otherwise have been. They calculate something like, if I remember correctly, because of course we did have a longer term shutdown in 2019 in the US, lasting for quite a few weeks, is that every week of a shutdown brings with it an 0.1 of a percentage point reduction in GDP. So it really all depends on how long it lasts, but it could have effects for longer. And I think that's the concern, even if the shutdown is averted after a few weeks.
Why do you think that tariff impact does still look muted? Why are tariffs taking so long to work their way into prices?
I think companies have borne quite a lot of that in profits, in the sense that they've been prepared to still sell at lower prices and see how things develop, because of course the whole tariff situation is very uneven. It could sort of change overnight. So we've seen some of those tariffs be announced very high and then becoming lower. There are still big discussions going on with loads of countries which are trying to have a slightly different arrangement. So there is a lot of uncertainty. So there's an admin issue about changing prices all the time. But there is also the fact that early in actually the first half of 2025, quite a lot of imports were affected in order to try and avoid the tariffs. So there's a lot of inventory lying around. And up to a point, I think that's being used to keep prices quite low because, of course, they were bought and brought into the US before the tariffs became effective.
That was Vicky Pryce of the CEBR. Don't forget, you can watch more videos on Reuters.com.